3, 2, 1. What's up, everybody? Ask HMB show, HMB Live on B Live, 3 p.m. on Tuesday. This is our new time for all of our shows for the HMB Live show, 3 p.m. every Tuesday. Make sure you tune in through Facebook Live. We want to see you. We want to hear you live. Feel free to comment below with any questions that you have, either pertaining to this show or any other topic that you have. We talk real estate, we talk business, we talk finance, and we talk marketing. All fun things that we like to talk about every day in our office together. So why not just share it with all of you? So again, any questions, feel free to comment below, just like this. Ask any question you may have, and then push the comment on your Facebook and it'll pop up. And if you want to be on the show as a guest, feel free to click on that link I just put in the comment section, and you can do that as well. So today we got a pretty cool topic, a topic that I would say we know pretty well, hopefully, since we've raised a large sum of money over the last 10 years as we started Hard Money Bankers. But we're going to go over 5 tips to raising private capital for real estate deals. I'm still surprised that a lot of investors have good deals out there, but they still have a hard time getting the money. Now, for instance, you don't necessarily need to get the money from a private lender. It could be from a bank. It could be a hard money lender, whatever the case is. But we learned this from years ago, and we're sharing this with you. And if you don't know this, hopefully you do know this. If you have a good deal, they will always get funded. It's that simple. If you're having a hard time getting a deal funded, it's probably because it may not be that good of a deal. So check that. So anyways, one other quick reminder, we're doing our meetup group tomorrow night in Columbia, 6 p.m. tomorrow night. We're talking about raising capital. We're talking about hard money. We're talking about banks. We have professionals in each one of those fields coming in to talk about that. But the topic of this HMB Live today is all about raising capital, all about raising private money. So if you need to raise private capital for a deal that you have in play right now or a deal that you may have in play, tune into this, share this on Facebook with your friends. If you know anyone that needs help raising private capital, share this video. And along the way, comment. Happy to answer any questions. If you know us by now, we're very transparent with everything that we do. Cool. So Chris, let's dive into 5 tips for raising private capital for real estate deals. Let's just start from the top. You want to just
Yeah, happy to. This is something I've been handling here at HMB for 10 years now, almost. I know this topic very, very well. And honestly, in my opinion, doing investor relations and raising capital is a great thing to do day to day. I think it can do awesome things for your business. If you do it right, it can be very enjoyable. And if you don't, it can be not so much a fun thing to do day to day. So we're going to give plenty of tips on that, how to do it successfully. But first things first, I would say that people need to determine whether or not they need private money for their real estate business and how they're going to use it. Because like we're talking about tomorrow night, there are a number of different kinds of finance, different ways to fund your deals in the world of real estate. And using private investors may or may not be right for you. Okay, so let's talk about that a little bit. One of the main benefits to using private investors is that it can be super flexible. You can set up the rules in the way that works best for your business. Like if you're thinking about a bank or even a hard money lender, you're going to be playing by their rules. You're going to be operating under the terms they set up. Whereas with a private investor, most of your people are going to be relatively passive and just looking for, some kind of interest rate return. They're not going to come with a whole bunch of structure in how you're going to do it. So it can be very, very flexible in that way. You can control the price a bit more as well. Like you can offer, say, hey, we're paying 8%. Hey, we're paying 10%, 12, whatever it may be. That's up to you. At least it should be. You shouldn't really be directed by what investors are demanding to be paid. You should set that and then go out and get it. Again, different from banks and hard money lenders because they make the terms and you can agree to them or not. And finally, I would also say one great benefit to private investors is that they're less influenced by what's going on in market conditions. Banks are big time influenced by markets and what's going on. Whether or not you can get a loan from them is going to change year to year. Private money lender, or I should say hard money lenders, their terms are going to change based on what's going on in the market and whatever else. Again, you're going to have more stability, less volatility if you control the capital source, which you can definitely do with private investors. That's one of the great things about it. Yeah,
let's define a little bit, making sure it's crystal clear what your business model is too, though, when you're out there raising capital. The last thing you want to do is jump in there and be like, well, I'm going to use your money to flip properties, and then I may do some rentals, or, hey, all of a sudden I'm going to lend it out, or I'm going to do this, I'm going to do that. I mean, you need to be the expert in this, but you need to, you can't be a scatterbrain. There's a lot of risks on taking on private capital. I mean, obviously we're going to go through the majority of the rewards today, but just think about that. Like, you need to sleep at night knowing that you're doing the right thing and the right uses with this capital.
Yeah, and I have a story about that. And you and I have talked about this in the past, but not recently. There's a guy who we know who was trying to raise capital. We saw him at a couple industry conferences, like private money conferences. And mind you, this guy is a doctor. He's a former medical doctor. He's very smart. He has his stuff together in many ways. But one thing that he does not have, and he said this to me at the conference when we both spoke on a panel a few years back, and he was like, yeah, I don't know how you guys are able to raise this much capital. I don't know how, no, here, what he said was, I don't know how you're getting capital investors to say yes to you, how to get that money to move from their bank account to yours, how to get them to agree to deal number one. And the reason why, he was presenting them with all kinds of different options of here's what we're doing. Oh, we're raising capital for this apartment building we're developing. Oh, we're going to do some lending. Oh, I'm going to do fix and flip residential and then maybe hold it out or hold it as a rental or something. All this different stuff. A super qualified guy otherwise was making investors nervous because he did not have a defined game plan.
Yeah. Yeah, no, it's interesting. And I think a lot of people think that, and I don't want to kind of jump through, but I think a lot of people pick investors based on dollars and cents of, hey, well, I'm giving them this percentage of a return, so I can do whatever I want with it. That's not necessarily the case. You can only technically you may be able to do whatever you want with it. But that being said, it's, if someone's trusting you with their money, it's got to be directed and put into exactly what you claim you're putting that into. And if you're a scatterbrain and you're not 100% sure your model, from A to Z, don't even start. There's just no point. Like, you need to know exactly what that money is going for. And even if you have some funky real estate strategy that you're using it for, that's okay. But just make sure you know it front and back and you define it clearly so they know where they're putting their money when they invest in you. Because let's be honest, private capital investors, they're trusting you. There's security instruments and collateral instruments and things like that to protect it, but they're trusting you with their money. So it's got to be done the right way and it's got to be put into the right thing. Cool. So let's talk a little bit about the presentation and the presentation of, I got a deal or I'm looking to raise capital and I want to put something in front of a private investor that I may or may not know. Like, what type of material would you give them?
Yeah, so a couple things there and another quick story. So we were in our old office, our old Hard Money Bankers office before we moved to this one in Columbia. And a guy came in, he wanted to do some co-lending in essence. Like he had some lending opportunities, or so he said, and he wanted to put some money with our money and lend it out to people. So when he came to the office, he had all the wrong stuff going on. This is a tale of what not to do. The executive summary and some of the things that he had on paper were very unprofessional. Lots of typos, a lot of the language didn't make sense. Just following the flow of the document didn't make sense. And the guy himself was not very presentable. He, long story short, did not look like the kind of guy that was professional and the kind of guy you would want to give money to. So, okay, let's do the opposite of that. Make sure that your presentation materials, spend some money on them, spend some time on them, even get a professional writer that you can get outsourced from Elance, Upwork, or one of those places for a few $100 maybe to write you out, to take your information and to write it out into a nice kind of presentation. I would also definitely include a one-pager, because honestly, depending on the personality type, some people are going to want a one-pager, some people are going to want a 20-page packet. So have both. Doesn't have to be 20 pages necessarily, but you get my point. Have the one-pager and then have your full presentation. And then also make yourself presentable whenever you're going to speak to an investor in person, look like the kind of person who people want to give money to, right?
Yeah. Agreed. No, all good things. And I think a lot of people cut corners related to this. But you know, think about if you had $20,000, $50,000, $100,000 of hard-earned money and you wanted to invest that. What due diligence would you do with somebody that you're investing that with, right? You know, you're going to invest in an asset that you may understand. You may invest with an advisor who you believe is an expert. You're going to invest with somebody who you strongly believe knows what the hell they're doing and is professional. So think about all those things. All right. So in a second, we're going to go over a few other tips we've kind of learned along the way, including how to pick investors, where to find investors. But I do want to make it clear that if you have any questions along the way, we're very transparent. Ask any questions that you have, comment below. If you want to be on the show, feel free to click this link and you can introduce yourself and ask your question live in front of everybody, or just comment below in this thread and do so. This topic is part of the topic that we're going to go in detail on tomorrow at the meetup group, the Real Estate Investor Incubator meetup group. I'm going to comment that right now and post that on. You can just go to the easiest way to click on that. You can either click on the comment or just go to hardmoneybankers.com/meetup group. We're going to be talking about raising private capital in much more detail. We're going to be talking about using hard money lenders in detail. Because a lot of people still don't realize that a hard money lender can be your best friend and leverage the heck out of you in order to do lots and lots of deals, and how to utilize banks. And we have industry experts for each one that are going to be coming in. So make sure you do attend that if you're local. I'm not sure if we're going to be streaming this one or not. So again, any comments, marketing, real estate, finance, or business, feel free to comment related to that. So before we jump into the next one, I want to talk about one other thing that I think is super, super important related to raising capital. I do believe, and actually I don't do believe, I know this for a fact, that a good deal comes first. When we started Hard Money Bankers 10 to 11 years ago, we went to go raise money before we had any opportunities to present. And every single person we went up to, 100% of the time, said, yeah, I'm certainly be interested in taking a look at any deals that you guys have, or taking a look at investing in deals. Show me your deal. Be like, oh, well, a deal is going to look like this. And it's like, great, bring me a deal. And over and over and over and over is bringing a deal to the table. A good deal is what gets invested in. A good opportunity, a good business model. That's what happens. You cannot have a hypothetical situation. Now, obviously, you may want to identify some investors ahead of time.
Of course.
And I think a lot of investors are scared to find the deal first, because it's, hey, which one do I do first? Do I do the money? Do I do the deal? Do I do the deal? Do I do the money? I'm not sure, because they're terrified that if they go put a good deal under contract, then they can't get the thing funded. Well, I can tell you that if you have a good deal under contract and you try to go get private capital and that falls through, you can always use a hard money lender. You can always go to a joint venture partner. You can always wholesale that deal. There's so many options. The important part is to have that good deal, that good opportunity. And if everyone keeps turning you down, you may not have a good opportunity. So just think about that. And I know that's really harsh to tell people that they've worked so hard to put this deal under contract and they're emotional about it and they truly believe it's a strong deal. It may not be as strong as you think. So you got to check that. But a good deal comes first. Okay. How to pick investors.
This is one of my favorite topics within this whole thing. Mind you, it's because a good portion of my day is spent on investor relations, working with the people who fund our loan portfolio, people we've worked with for years and years. And over that time, I've seen the people that you definitely want to work with and are an absolute pleasure to be partnered with, and the opposite too, the people who you want to stay away from. So first things first, you have to underwrite a potential capital investor just like you would a deal, just like you would a business partner, because let's be honest, they are a partner of yours. I mean, you might not own a company together, but you're still partnered on deals, hopefully for a long time. People make the mistake of saying, oh, hey, this guy's got money, he's willing to give it to us for 10%. That must be good, right? And that is absolutely not the case. I can tell you from years of experience, the price is only one factor out of many, okay? So underwriting potential investors is something you need to be aware of. And that's hard for people to do when it's, you're getting your first 100, 200, 500,000, whatever it may be. People are just going to take the first opportunity that comes. The first person who says yes, they're going to jump on it. And that could be a mistake. So one great way to underwrite potential funding partners, investors with you, is to learn the DISC personality profile, DISC. If you're not familiar with it, Google it. If you really want to know it better, take a test, a DISC personality profile test, which you can do by Googling Tony Robbins DISC, DISC. He has a free one on his website. It's a good one that we use in-house. Now, there's a couple, I'm not going to spend too much time on it because this could be a whole presentation in itself, but out of the 4, there are 2 personality types that I like to target for capital investors and 2 that I like to stay away from. The 2 that I like to target are Ds and S's. The D is your standard dominant, usually business person, successful, could be a man or a woman for sure. All of them could, all the personality types could. They typically, have had some success in whatever it is they do, meaning they've also accumulated some money. They have capital to invest. This personality type also makes quick decisions. They understand things intuitively. They're not going to kill you with details. They want the broad strokes and the important stuff, and they'll say yes or no very quickly. And after they fund something, they're not going to bother you all the time about what's up. And again, that's going back to some of the business model and setting expectations when people will or won't get information from you on a deal. But that's something else we can dive into tomorrow night at the meetup group. So D's is going to make up a lot of your investor capital for sure, as they do ours. Another good one is S. S is going to be like a lot of family members, maybe an older relative, something like that. Older folks who might be have some capital to invest, but they're not going to be too active in it. They probably weren't high-level business people to begin with, because that personality type often is not. But they just want you to do right by them and to put their money into a good place. There's a high trust relationship that you have with an S personality type, and then they're going to totally leave you alone and let you do your thing. But you have to take care of them, do right by them. Absolutely. They're too passive. You got to make sure that whatever's happening with their money, and like we use the term, our own grandmother's money, you have to treat it like that, like it's your own funds, your grandmother's funds, something that you would absolutely, absolutely not want to lose a dollar of. And that's how you should approach an S. And then the I and the C, I typically stay away from. I's are big talkers, are big salespeople, oftentimes don't have a whole lot of investable capital. And C's are your super analytical types, often engineers, college professors, accountants sometimes. And they're going to kill you with details that make you want to stay away from them. They're going to take up too much of your time. They're going to give you too many headaches. And they're not great capital investors in my experience. And over the years, we've let a few of them go. We've let some of those people go just because it's not worth all the aggravation of dealing with the C. C's are great. Don't get me wrong. They're very, very good at what they do. And they often do have investable capital because they're good with their money. But at the same time, they're going to drag you down a little bit. So I would give a little word of caution about C personality types when it comes to investors.
Yeah, all good points. And like you said, even though they may not have an equity position in some of these properties, they are business partners to you in one way or the other. And you got to treat their money like it's your own, anyone's money like it's your own. And taking on the wrong partner, no matter what they're doing, they don't have to be like a managing partner with you. They can just be a money partner of you. You have to find the right partner or they'll hurt you. And again, the thing with going back to C's is, some type of asset class, some type of investments to raise money from may work out great. Maybe it's something that you need their expertise to help analyze something. But if you're looking to pay a passive return because you're the expert, you should be the expert in this, they may want to micromanage you. And taking on that wrong partner could be detrimental. I mean, think about this. Everyone jumps into hey, I need this money. I need to close on this deal. I need $100,000. And the first person that puts up $100,000, you're like, yeah, this is great. Well, to be honest with you, it may have been better to pass on that deal and not do that deal than bring on the wrong capital partner. And, here are some real nightmares that could happen. What happens if every day that investor reached out, he says, hey, how's my investment doing? Or how's the construction going? Or how's this going? Oh, what did you do here? What did you do here? Like, do you want a boss to look up to every day to answer questions to? Now, don't get me wrong. There's a difference between somebody being concerned about their money and somebody, trying to get updates. We give updates all the time to our clients. but I can't have somebody micromanage the project and question every decision I have. And then what happens if someone's halfway through a project and they say, oh, you know what? I need my money back. And then you can't get it out of the project. So just, you got to think through these things. You can't just jump to the first person that says, hey, I got money. Can you give me some? You have to underwrite investors just like you underwrite deals. Think about that. You have to underwrite investors exactly. You have to underwrite deals to make sure it's a good investment for you and a good investment partner for you. Those are very, very, very important things to do. And, we've learned that along the way, and hopefully you can learn some of that stuff from us as well. And keep in mind, as we go through this, we are not soliciting capital. We are very well funded, and we have been for a long time. But I do, the point of this is educational purposes, just to give you some tips. And one of the things that we're going to be talking about at the meetup tomorrow is raising private capital, using money from hard money lenders, and using banks. And every big investor out there, real estate investor out there, I promise you, have used all three of those different capital sources, because every capital source is important depending on where you're at in your business and the type of transaction that you have. So here's a link to the meetup group. If anyone wants to come tomorrow night, we'll have usually what happens is we have about 200 people that register and about 150 or so that show up. We have room for just at 150. So if you are planning to come, please make sure to RSVP. It's important. It's free to attend. We don't sell anything. Nobody there is going to be selling you or pitching or doing any of that. It's just local live investors, real investors doing deals. Okay. Any questions, comments along the way? Feel free to comment. We got one more good bullet point, one more tip that we feel is very, very important in raising private capital. So let's jump into where to find investors.
Yeah, that's always people's number one question. And once you get into it, you'll find that some of the other things that we've been talking about are more of a challenge than where to find them. There's not some magical club that you have to get access to in order to get all the capital that you'll ever need, and no one else gets it. It's not like that, but people kind of approach it that way. How do I find them? Where do I find them? Okay. So a couple things on that. It's my belief that within your first degree and second degree networks is all the capital that your business will ever need. And if you picture LinkedIn, I'm sure a lot of people use LinkedIn, and it has your first degree connections, and it says a couple thousand here, and then the next one is 20,000, those circles that go around in that thing. In that, the people and the people they know should be everything you ever need. Now, just because some person you don't know has capital, that doesn't necessarily mean it's for you. Say a guy named Jim has a father who's a multimillionaire and has a lot of money to invest. That money could be for Jim. That money is not necessarily for you. So it's not about who I know or about who this person knows. It's about who you know, who's in your world, right? And then approaching them in the right way, like we thought about before, or like we talked about before. So I would think about that first and foremost before you go to outside people, before you go to strangers, before you consider any marketing. Really work your way through your first and second degree networks. Yeah,
that's a good point real quick too, because I know a lot of people they're like, hey, you guys are very well capitalized already. Can you give me some investors? It's like, no, I'm not going to give you some investors. But if I did give you investors, what makes you think they're going to invest with you? And what makes me think that your investors are going to invest with me? Right? It doesn't work like that. You're raising capital because the person trusts you, the person, believes that you're an expert, you're going to do good by them. They're investing in you just as much as they are in the asset or the collateral piece or the instrument that they're investing in. So you need to think about that. And don't get me wrong, if there's a local private investor, hey, maybe they will invest in this. And you know what? Anyone out there who is a private capital investor, you're investing in the person that's deploying that capital just as much as you're investing in the collateral itself. Think about that. Anyone out there, and you know what? I would probably say that there's more capital investors out here that are silly than not, especially in a time and place right now where, we're in a hot real estate market and there's, high interest rate returns to be had. If you're, for instance, if you're a private investor, and we can flip the switch on this, if you're a private investor and someone's spitting out, hey, I'll give you 16% on your money. Hey, be cautious on that. Great. What does it matter what interest rate you get if you never get your darn money back? It doesn't matter. If you invest in a bad deal, you might as well have just left it in whatever, some low rate mutual fund or whatever the whatever it was in before, if you're going to lose all of it anyways to a silly investor. So everyone has to underwrite each other. Investors have to underwrite deals. Somebody raising capital has to underwrite the investor. These are all important things.
Yeah, absolutely. I mean, people skip over that so much, it's amazing. And granted, I have a different perspective because I've been doing investor relations for a decade. So I understand the fact that people don't have that perspective. And that's why we want to give as much information and value as possible. Okay, a couple other things, just in addition to your own network and your second degree network, some other tips and tricks. I wouldn't even say tricks, just some other ideas on where to find potential capital investors. I think that self-directed IRA investors, people who have a self-directed retirement account, are a great potential source of capital. And here's why. A lot of people get a self-directed retirement account because they want the idea of, oh, I'm going to direct my own investments. I'm not going to be subject to the volatility of the stock market. I'm not going to get charged a bunch of fees by mutual funds, et cetera. But the problem is, as soon as they get a self-directed IRA, they realize they have no deal flow. What are you going to put it into? Like, are they buying properties? That might not be what they do. And then even if they do, they might not be able to structure it right. Are they lending? Maybe they want to lend, but who is going to borrow it? They don't have any deal flow, right? So I think that is a great source of capital for people who are doing good deals to find self-directed IRA investors at conferences, the ones held by the big self-directed IRA custodians like Pensco and Equity Trust and the other ones. I think that's personally a great source because I know for a fact that most of those people have no deal flow, and it leads them to put their money into bad deals. It leads them to make mistakes because they'll get presented with one deal. Now, mind you, we fund like 1 or 2 deals out of 50 or something, or out of 20 as a lender. Whereas a self-directed IRA investor, if they see 1 deal or 2 deals, they're going to fund it right away because they don't have deal flow. So they're going to, long story short, they don't have deal flow, so go after them. I don't want to, belabor that point too much. I would also say that real estate meetup groups and RIAs and coaching groups, we see a lot of private investors getting funded by people in those groups, in those things, because the people are already there. They have some kind of capital. They're showing interest in lending money or partnering, whatever it may be. And that definitely happens. So I would say that's a good source as well. And also the people in the, when you pay for coaching, like the Than Merrill and Armando Montalongo, people who are paying a good amount of money to get in the game and to learn how to do it, are often lending to each other. So if you're involved in one of those networks, I would say that's a really good source too.
Yeah, I mean, it's safe to say that we've had one of our private investors become one of our borrowers, and one of our borrowers become a private investor, and on both sides. So you never know. I mean, we have private investors that come to our meetup group, and then we have borrowers that come to our meetup group, and you never know where it's going to come from. You just got to be proactive on that. Listen, we talk about this all the time. There is 3 things you need, and this topic is not about this, but it'll kind of sum this whole topic up. There's 3 things you need to be successful in real estate investing. You need access to deals, you need access to capital, you need access to resources to help you navigate this transaction, right? And all 3 of those are equally important. If you have access to a lot of deals and you know how to do deals, and the missing link is the capital side, you can do 2 things. You can either go and you can devote a third of your day or half of your day to go raise capital, or you can go to a bank or a hard money lender or somebody else along the way. Raising capital can be a full-time job. It can take up half of the time. Now, don't get me wrong. I do believe you should be raising capital out there. Do not miss out on an opportunity because you don't have the capital, but you should be raising capital out there, and take it slowly. You're not going to go raise $1 million overnight. It's going to take time. Keep in mind that when somebody invests into an investment vehicle and they show a good return, they're going to keep investing and reinvesting and maybe put more principal into it. So some of these investors, they may need to see the life expectancy of a deal in order for them to give you more money. So they invest $100,000 into a deal. You flip it, you make $20,000, you pay them their $12,000, whatever the case is, whatever your interest rate return is. They say, wow, this is great. I want to put more money in, and more money and more money. And that's what happens. It takes time. It takes time to do that. So, think about that. So, all right, well, if you have any questions related to this, happy to answer them. We're wrapping up. I'm going to talk about our meetup in a second, but some of the things that we talked about today is we talked about 5 tips, and at the meetup group tomorrow night, we're going to talk about more. Chris is going to talk about more of these, but today we talked about 5 tips for raising capital. We talked about making sure you define your business model. We talked about your presentation really, really matters. All good deals come first. make sure you have a good opportunity first, how to pick investors, and where to find investors. Again, tomorrow night, we're going to be talking about raising private capital, using hard money, and using banks. All three of those are so important. All three of those funding sources you need to be using all of them. If you currently are running a business right now and you have not used all three of those capital sources, you're missing out on opportunities, I promise you, because you need those for stuff.
Very true.
So cool. Well, we are going to wrap it up. Hopefully you found this helpful. We do this show HMB Live every Thursday. We moved our time to 3 p.m. Eastern. Every Thursday, we're going to be on live next Thursday at 3 p.m. So any questions along the way, feel free to comment, and we're happy to answer them. So hopefully you enjoyed yourself. We certainly did. And any questions, feel free to reach out. Thanks, guys.